looks like we are super delayed. Can I change that? Low latency. Okay, well, finally back to a live stream. Looks like I have like serious latency on the chat. Oh, now no data. So hopefully this turns out all right. I'm gonna close some unneeded stuff. OBS looks okay. Anyways, what a rough week. Actually, let's see. Where did I end up week wise? Oh, 4,000, I guess, since I left. But pretty crazy that we started out like everything looked pretty good for a while, came back down. So it's nice to not focus on it for a little bit. But I did see, I want to find a couple tweets. What's up, H Mons? How you doing? So I know there's like a lot of questions. I didn't even have a chance to get in Discord this week at all. What's up, Daniel? So where was, let's see, it was Gary Black's tweet. I guess he tweets a lot, but I wanted to find one that was going to be pretty cool. Kind of, he did have a meeting with Tesla, and I think it was yesterday. Oh, this one's it. Make sure this is nice and big. I'm good. The accounts are looking a little rough temporarily. Yeah, absolutely. And one of the things I thought that was pretty cool, this tweet I saw from Gary Black, right? So, portfolio manager that he talks to regularly at a huge fund told me his portfolio manager colleagues will not buy Tesla until Elon Musk is done selling. Hedge funds can see when he's done selling and front will run his sales. It's easy money for the hedge funds. Like me, no one gets why he's selling this recklessly. Which is so kind of like negative in the short term. Basically, like if portfolio managers, hedge funds are not buying in at any of these levels, which I think we can kind of clearly see that they're not, just based on like looking at Tesla compared to the NASDAQ, where that just like rocketed up and Tesla stayed relatively flat. Not yesterday, but Thursday he did sell. But as soon as that's over and he's about 2/3 of the way done of his shares, hedge funds, portfolio managers will buy in. So we don't know when he's going to be done. It looks like it could be there's like another 7 tranches or another 7 weeks, essentially, if he keeps selling like once a week, which is a little while, in the short term, but long term, long term won't really matter. So, um, short term wise, I'm definitely not going to hesitate to get things like rolled out a little farther than usual. Um, if hedge funds and the big money are not coming in, I'm not going to fight that, essentially, knowing that they'll come in after he's done selling. So, like I said, if things keep up for the next couple weeks or the next like couple months, basically once a week, keeping it down a bit, and stock's not going up with the rest of the indexes and basically like the overall market, um, I might be looking at February to roll stuff out too. I mean, even though we do have pretty big catalysts coming in January, and actually over the next couple weeks, we saw some prototype. We saw a prototype Cybertruck. We saw some semis, and they look like they'll be getting delivered to Pepsi. That might be somewhat of a catalyst, and the fact that those two, both Texas and Berlin, are coming online the next, 2-3 weeks. So January, like by the end of December, could look very good and could counteract the selling, and also I find it hard to believe that they would wait until that last minute. Like if once he's going to be done, that the price should spike, because that's when hedge funds should come back in, and it should spike back up. Could do 100, couple hundred points within a few days pretty easily. I mean, just as easily as we have these crazy down days. We can have those crazy up days, which we experienced recently. What is that? How long has that been? Like a month ago now since we've had. I mean, it's only been a couple weeks from those crazy upnesses, right? So just as much as we have those, or just as much as we have these crazy down days, we can have these crazy right back up to where we were. So red's my favorite color, but I hate seeing it so bad on the account as well. Yeah, I know. My mom always told me, she's like, "Oh, red really brings out your eyes. It looks so good on you." But yeah, on the account, doesn't look so good at all. You're right. But also keep in mind, like, we need this volatility in order to keep the premium good. If it did not have this crazy volatility, the opportunity to make that much money just wouldn't be there. If it was just flat, rose slowly, without that volatility, there just wouldn't be so much opportunity here. So, I mean, that pain, that difficulty at the end of the day is totally, like, that's 100% why we get the opportunity to make money. And if it was easy, wasn't stressful, like literally everybody would do it. And even if you gave them kind of the steps, the 1, 2, 3, like here you go, just do this over and over again, where things are super safe. During those down days, a lot of people can't emotionally handle it. So yeah, we've had 3 dips. That one was crazy down to 950. I think that was like one of my first or second days in Vegas, and I remember I was like just up all night till the next morning. So I think when I posted in the Discord that little bit of upness, or like when it opened up the next day after being down at 1040 or something like that, that was pre-market. Super excited. I was still up like 24 hours or whatever at that point, so it was super fun. Hopefully 1,000 strikes hold strong. Yeah, I mean, obviously it's not holding strong. We didn't close down there. So I don't know. We'll see. We have, I mean, all the indexes are really good. Probably will be. We do have Jerome Powell speaking. I can't remember which day now. So depending on what he says, that could affect the overall market. And it's like Tesla's taking the hit with the overall market, but not getting the bounce back up. I mean, let's see. So purple line I have overlaid on this. This is, well, I guess that's kind of fair. I mean, except for like, it definitely didn't come up with the NASDAQ at the end of the day, but really NASDAQ started higher. Yeah, but it's not. It's just not getting that upside with it. So I mean, we'll see. If anything, if you have the extra money to buy shares right now, it's super. I mean, it's such a good opportunity. Like at the end of the year, at the end of kind of no matter what, no matter how far or um, kind of no matter like how far I have to roll things out doesn't really matter. And kind of the same thing that I did last year, right? Like at by the end of 2021, I had no doubt at all that we'd be above 700, even though we were down in the 500s, and it seemed like it wasn't going anywhere, and that's where I just continually rolled things out to. I think at the end of the next year, like 12. What did I have? Actually, I had calculated it somewhere. Uh, let's see. So we had, yeah. I mean, like there's no way we end up below the all-time highs of 1250, but so like absolute worst case scenario in my mind at this point, and this is just my theory, if the whole market does horrid, and nothing's doing well, I still think we'll see 12 13 by the end of next year, and if everything goes just steadily, then we're looking at $1,500 or $1,600 by the end of the year. That's what I'm thinking. Do you think 1,995s are dangerous? Put credit spreads in December. Where in December? Like we only have a few weeks left, so like generally, like I said, 4 to 6 weeks out is pretty safe. We still have extrinsic value, and we're able to roll at that point. So dangerous? I don't know. I mean, I don't feel any of it's dangerous as long as you're on top of it, and you don't freak out. Like we knew CPI was coming in for Tesla, which what did it hit? Hit like 980, which I guess wasn't terrible. Spent a little bit of time below 1,000 yesterday, and that was just overall market movement. I don't think there's a danger really to Tesla itself. I think everything's positive. The only real issue right now is the macro environment with inflation. Whatever Jerome Powell has to see, what he has to say. Next CPI should be really good, according to what was said at the White House. I can't remember who that guy was, but it really felt like he was preparing us. He's like, okay, look, the data that we have is from like a month ago, and all the analysts, all the data that we have more recently, everything is chilling out price wise. So it was almost preparing us for a bad CPI report. So I was surprised to see it met analysts' expectations, and which is why we had that spike up in the morning, which I believe correlated, to the SPY right here. So we had all that great data. Next month should be better. So CPI should be great. The only real scare I think between now and January-ish is Jerome. I have some positions for 1217 and 1223. So I rolled all my 12. Like I don't like them expiring next week. I mean, I obviously could have had them expiring 1 week. I did because I was not monitoring anything for vacation, and I forgot that I had 1000s expiring yesterday. Just completely forgot about it. And then of course we opened up the day and we were down, and they were like negative for a little while. But I personally don't like them, especially next week, because I mean within a week's time we really don't know what's going to happen. And if it happens to move down pretty quickly, you're going to lose a lot of that extrinsic value. So it's either going to cost a lot to roll, or you'd take a loss on it. But if you just go ahead and roll it out preemptively, roll it out a couple weeks, and if things move against you, it'll either cost you less or you can get a credit to roll it out further, just depending on what we see next week. And let me see. Let me look at the upcoming events. I can't remember. Okay. So Monday, nope. We need retail sales. Okay, so FOMC 2 p.m. Wednesday. Retail sales Wednesday. A lot of PMI. So aftermarket Wednesday. Or wait, no, let's see. That's what is it? I always get confused because these are all Eastern Standard Time. Eastern Time. What is 2 p.m.? Yes, 2. Okay. Okay, so not before market closed. I always forget. I'm on West Coast. Let's see. That premium is so juicy right now and has been for a while. It has. I still can't believe I got those 800s, 800 795s, and I got $50 on them for like a 2 week expiration. That was crazy. Like right now, if you have extra money, you can play so crazy far out of the money since it's come down a little bit. I mean, keep on. It's an easy thing to say. Well, it can't go down much more, but things can for sure happen, especially with the macro environment. Are leap options good? I haven't looked at the pricing for them. Um, but at this point, yeah, probably they're probably really good for. No, I don't want notifications. They are like if you can catch them, especially when we're down like this, for sure they're going to be good and a lot more. I mean, a lot more leverage for the upside too. So if I was to look at them right now, I would go at least. Well, leaps obviously typically are a year out. I would just look at the end of the year and look at it relative to what I'm paying to about the 1500 or so. And there's a good chance if you were to purchase them right now and then we get all the catalysts in January, like we find out Elon's done selling, hedge funds get back in, production numbers come out, 2 more factories open, we could have a huge spike and you could make a huge percentage on them in a short period of time. What are your thoughts with Disney? Is that something you're keeping an eye out for, especially with all the upcoming content? No, I haven't. Isn't it like super cheap right now though? It was actually super strange to spend a couple 2-3 days just totally disconnected from everything. Um, oh, they got a nice. Was that bounce just? Let's see. With everything else, I don't know. I think the one thing I had heard before I left was just basically like the Disney Plus subscriptions had gone down, and I don't know. Here's like one of the problems with something like that. I can take a look at kind of the small news, but I don't know um like where all the income streams are and what really affects Disney. I mean, for me, Disney is still like the theme park company at the majority of it. So I don't even know what percentage of the revenue comes from like the parks and the licensing and the stores and the merchandise relative to the online content, and how much of the uptrend has been due to Disney Plus. And also I don't know a whole lot about Disney Plus. Like we have it, I think. And I don't. Is there like I don't know, but I okay. Sorry. Let me preface it by saying I get bored with watching kind of the same stuff over and over again, and I typically I like educational content a lot more. I don't know. Is there content so huge that somebody can just like watch it week after week after week, kind of like Netflix or Amazon. I don't know if they're similar to that, for someone to keep it, or do they get it, see all the old movies they want to get, or see all the old movies they want to see, maybe a few new ones, and then they're kind of done, and it doesn't make sense to have the subscription. So I just don't know enough about it. If we have a sector rotation drop like what happened to Tesla earlier this year, that means a stock in the low 800s very soon. And don't forget, Elon is still selling, so that's added to the selling pressure. Yeah, and he's been selling like once a week. Thankfully, we're 2/3 the way through it. You rolled your higher spreads to January, February, March. Yeah, that's smart. I mean, that's exactly what I'm looking at. So that really aligns with my thoughts. And yeah, especially like, being on vacation, then have to worry about getting things like rolled out at the last minute. It just doesn't make sense. It's too much stress. But I don't think. Do you think what happened earlier this year was a sector rotation, or was it just literally overpriced? I mean, I see both sides of it. When it was up at 1,000 or whatever it hit, and then it came back down, I'm still, super bullish on it and going, well, yeah, but the stock's going to be worth $2,000-$3,000 in a few years, So to me, that future valuation, that justified the current valuation, even though, they're still building towards it. And for me, someone that looks at it, I see their path there that's very clear and without a lot of obstacles in the way. And I think part of the overall just thoughts about it is, like you still get a lot of people like, hey, it's just a car company, or they'll base valuations on just a car company, which is completely inaccurate. But with over 1,000 PE, it was pretty ridiculous. I guess. So to some extent. And there definitely, there was macro, there was sector rotation. I think on top of it being overbought, it was probably all those things. The nice thing is could have bought it at the peak. And as long as your dollar cost averaging, you're still doing super well. If we see low 800s, oh my gosh, I keep saying it, but I absolutely 100% will just like leverage to buy as much as I can. If that happens if it's in the next month and a half, I'll take all my extra funds and stick it in there for sure. Because by the end of next year, that money is doubled. Like I'm super confident in that. Short of World War III or a brand new pandemic or something like that. That's nuts. Roll out or get assigned, sell. Wait, roll out or get assigned and sell covered calls. I'm not sure what you're asking. I'm just gonna roll my put credit spreads. I will roll out. True, thank you for your thoughts. Disney does have a terrible PE, but a lot of analysts are bullish with tons of movies coming out, especially Marvel being a successful franchise for Disney. What is their PE ratio right now? I haven't even looked. And it's also like, for me, it's an anecdotal thing. I have to look at it kind of through my own eyes, which everybody kind of has to do. And maybe it's different, like depending on how old you are, if you're into comics or if you have kids. Like for me, some new movies coming out doesn't make me want to get Disney Plus at all. Especially those type of, I don't know if all the theaters are open. I think they all are. But for me, like those kind of movies are theater movies or whenever. And I'm sure a lot of people spend a lot more time watching movies and watching TV than I do. Where do you have your M-Bike 314? Where do you have all your spreads at? Are they like around the thousands or so? I'd be super stoked if we hit 800s though. Like 800s, that's I don't even know. I don't even know where I'd stick money. Would it just be shares? It probably would just be shares. Yeah, definitely. Because I can buy more shares than I can do anything else with, and that's pretty solid. And whatever happens short term doesn't matter, right? Those could at 800, it could go down to whatever, could go down even more, and it wouldn't hurt long term. But low 800s, that is definitely that's like leaps territory. That's everything. I just have to look at what the return on would be with both of them. They have, let's see. Upcoming Disney movies. Ooh, a new Buzz Lightyear's coming out. See, that's cool. I might have to watch that. The Marvels 2023, Turning Red, Death on the Nile. It's always so hard to relate to stuff that you don't actually do in your real life. Like if you're not a movie watcher, it's hard to understand. It's like super hard. The one that's still hard for me to understand is like TikTok. I have so many friends, not no, not so many friends, but quite a few who spend so much time on there just like watching stuff that doesn't do anything for them. Like this is so funny. I don't know. I still can't get that, and I've tried a few times because I like entertaining content, but I just like education is so much more valuable. I think I screwed up and forgot to roll out my 1045 1050s next week. That's not too bad. Definitely could be in a worse position, and that's the thing. It was cool because I was looking at like I have 1100s I think expiring in January, and I can still roll those out a couple months, even with the price down at 1,000, and still collect another $100 premium. And they're just $10 wide spreads. 29 spreads from 820 to 1105. Nice. Yeah, they're still. Let's see, where's the? I was looking at. Let's see, where's my soonest expiring highest one? 1130. Yeah, they're all like 121s. But if we switch this, nope. Let's switch this to last price. So 337 on some $5 wide guys. 667, 121. I want to see. I'm not. I can't remember when I actually looked at it, but so if I wanted to go out till June or something crazy, it wouldn't make that wouldn't make much sense though. January, March, April. April would probably make more sense. Can I still get a credit for these? Oh, these are like, well, I can look at the one above it because these are. That's cool. They even have in April. They even have $5 wide ones here around that price. So 630. Oh, that means I'll actually have to pay a little bit for it, right? 630, $30 a piece. Eh, not too bad. And I guess depending on like if it goes up $20 or something like that, $10, $20, should be able to roll it out for a credit there. But I also keep looking at I added, let's see how many shares. Let's see, I added a few more shares. So we're at our 255, 420, 69. Um boy, this I feel like, I mean, at the end of the year, $1,500, so that'll at least add 125. Okay. Rolled out 9 in the money yesterday and still was able to make a credit for them. Yeah, it's so nice. It's so nice. As long as we do it early, and that's a huge thing. And it really sucks to be kind of in this weird spot where not very long ago we were selling them like $200 out of the money and stuff, and now everything's like kind of close. And what I really don't like is to be uncomfortable with any of it. And I'm so perfectly fine. I realize I kind of have to separate the Tesla news with overall market news, and I think I also underestimated the down pressure with Elon selling. But that day, it's like there's just like one of these huge catalysts now. The day he's done selling, I mean, that day it's going to be a nutty day. It's going to be a nutty week. Probably going to catch up to every bit of downness that we've had. $10.40, $10.45. Put credit spreads 1.7. Looking to roll them out this coming week or wait till the 31st. I'm thinking I'm going to hold out until the week of the 31st, unless something drastic happens. Thoughts? I would look at 3 weeks before expiration. 21 days is pretty good. You just started for the theta decay. Um, you haven't really seen any decay yet, and I mean, there's obviously no crystal ball, but we can have, this upcoming week. One, either Tesla kind of catches up with the rest of the indexes, or maybe it kind of stays even. And I would wait to see what Jerome Powell's effect has on anything. I just, for me, I overall, like, long term, kind of regret um, making any quick moves, and I don't think that's necessarily a quick move. Um, but if you're uncomfortable with it, 100%. That's one thing above everything else. If it's gonna stress you out, sitting at 1,000, like if it's sitting kind of where it's at over the next few weeks, then 100% roll it out. Like, roll it out till the end of January, February, March, like whatever lowers your stress. You don't have to worry about it. You're probably not doing this so you can afford to eat. You're probably doing it to make money long term. So if you have to, whatever money that is sitting there, probably what, $200, $300, I would assume, about $300, something like that, sitting there. Like, why not wait another month for $300 and lower your stress level? What are those? I was actually thinking about doing some end of the year ones too. I think, or end of next year, and way up um where I'm thinking they should be 1.7. That's cool. They have $5 increments up here too. So 1040, 1045s. Oh, they're only $200. That's not bad. Yeah, extrinsic value is so wonderful. But I wanted to look at like end of the year ones, and I think I grabbed end of this year ones a long time ago. Uh, 2022, January. So where's next? 20. Why am I missing it? January 2023. I was thinking like maybe grab some 1500s or something like that. 15,475 really will only cost what? Credit 2142. So basically cost us $357 to open, with a $2,100 upside. I don't know. Can we see that? Oh, let me move that over. Oops, that didn't work out very well. Come on. Oh, we still can't see it. I guess I gotta just move my face out of the way. But for $350 by the end of the year, 7x, that's not bad. 6x. Have you ever put in the money, put credit spreads to start with? Yeah, for sure. I did that. Yeah. Yeah. I can't remember at what point it was, but I had done some after the huge drop for the end of the year. I was just like, well, I can open them up. And this is exactly something, I mean, this is something that I will look at doing. I mean, cost $300, $357 basically, right? And $1,500 by next January, I think is pretty reasonable. So yes. And my worst case scenario would be $1,200 if everything doesn't go right. Let's see. Those are only $760. So looks like a pretty easy 200% profit. It's just the only downside is tying up the capital for a while, but I think that's fine. So yeah, especially like when we've had during the NHTSA investigation, when it dropped off of that, I did it then. But you can do the crazy thing with the put credit spreads is you could do the exact same thing with the call credit spread. So what do we have? 760. Let's see. Switch. Oh wait, I need to cancel these. I think it should be almost exactly the same. Oh look. Oh, that's right. I do have one of these. I have a call credit spread. 1,000, 1050. Let's see if it's that same cost. Oh, that cost $900, so it's actually cheaper to do the put credit spread. 1.5 times our money. So, yeah, but I don't know. I'm really hoping this week is pretty chill coming up. Down in the 900s, even though it's kind of a bit stressful. And I just don't like. I have not liked it all that we've not seen any of the upside with the Nasdaq going up or the S&P. I mean that's insane. Just nothing. Everything was ripping up except for that. However, on the other side of the coin, I know I've seen plenty of days, plenty of days where the whole market is red and Tesla is like the only thing that's going up, or people are like, oh, losing so much money. So they don't necessarily correlate. But for the most part, because there was no bad news with Tesla, there really shouldn't be, unless it's just sadness from 12.9 and no stock split happened or something like that. Do you think Elon is going to bankrupt Tesla? Absolutely not. Why would I think that?
The only I wonder what are you asking that for? So that was like his secondary goal is to not bankrupt Tesla. They don't really care about making money as long as they're not bankrupt. And if you heard anything bankruptcy wise, just I don't know if what you heard was about SpaceX, because he did put out an email to SpaceX employees saying basically like they fired some management. They had a problem with the production of their Raptor engines and got rid of that, and then he dove in there, got on the production line, and said it's worse than he thought, and stuff like this could possibly bankrupt the company. And speaking about talking about SpaceX in relation to Starlink as well, like if they've produced the Starlink, the ground, whatever they are, the modules or the ground kits, and they need to be able to launch the new Starlink satellites. And basically, if they didn't get these engines figured out, whatever the management was supposed to be doing, whatever they didn't, basically said that could lead to bankruptcy, and that was not an immediate bankruptcy thing. It was long term. So, and even though the two are related, same CEO, that's not really going to affect Tesla at all. As a matter of fact, I think Tesla would have a very difficult time going bankrupt right now with their margins. I mean, they're still spending a ton of money. Basically, if they stopped spending money right now, the amount of profit they would make would be insane. Because they wouldn't have to spend so much money on R&D. They wouldn't have to spend money on Dojo. They wouldn't have to spend money on any of the development. And if they just decided we're going to stop and become just an auto manufacturer, their their profit margin on cars are 3 times what everybody else's are. They're super high. I heard Elon said that he doesn't want to be CEO anymore. Tesla would be screwed if he left. In relation to him saying stuff like that, first of all, like titles don't matter much to him at all. Like the whole title thing, just he's like, it just doesn't really matter. He's like, I think there's only a couple titles that actually have meaning, which was like, treasure. What is it? Treasure. And I can't remember. Like, there's basically a few officers, but that's why he changed his name to Techno King. Was that was was that what it was? So it doesn't really matter. And then he was joking on Twitter about becoming a full-time influencer or something like that. I'm sure he doesn't, but that's like his life's goal. It's his mission. I mean, Tesla was put there for a transition to get off of fossil fuels to get onto sustainable energy, and that's what they're doing. The goal was never to make a ton of money. That's just the byproduct of it. Um, and and even though like other people, there's Ford and everybody's jumping on board with the EV thing, that's part of Tesla's mission, was to push people in that direction. So from that standpoint, absolutely successful. But not there's no bankruptcy, and they're just not even close. Like their earnings keeps getting better and better, and a big portion of where the money goes is to Elon's compensation. So and a lot of those tranches are done. They're gonna end up having a new plan for his compensation, because he doesn't get a paycheck, he doesn't get paid. It's just stock options. So that stuff will be cooling off over the next few quarters. But financially, they're doing fantastic, paying off like most of their high interest debt. Financially, they're in a fantastic position. I think it's the selling pressure from Elon, some rebalancing from the big money managers, and some pullback from risky, shy retail investors as to why the stock price is a little beat up. Yeah, I think it's fair. Selling pressure. and the pressure that we know is coming. And it was a massive run up. So probably some profit taking. And I don't know what percentage of the pressure comes from retail. And it's, the majority of people I interact with are super bullish, right? Like, or just read on Twitter, but they're kind of mostly like-minded people. I'll watch Gordon Johnson for some comedy, but for the most part, it's other people just going, "Oh my gosh, what a gift! I bought the dip. I bought the dip. I bought the dip." Like, you see just tons and tons of people doing that. I don't know where they get all this money. I don't know how I keep buying it, but I'll sell off my other stuff to buy it. That's for sure. Yeah, where was his? He's been jumping on Twitter so much recently. Uh, where is it? His his tweets are like they're already out of control. Santa Claus has a list. Okay. Where was Bill Gates? Oh. Oh, this is the tweet maybe. Thinking of quitting my job and becoming an influencer full time. What do you think? And then I think Mr. Beast. Yeah, Mr. Beast. I'll coach you on YouTube. Get how to get YouTube views. And then he talked about someone said, "I'll be your first subscriber if you make an OnlyFans." Maybe I will. Pretty sure he's just joking about all that stuff though. Where do I watch all the Tesla news and production numbers? Twitter is a great like Twitter is a great live feed, or pretty close to live, for what's happening. Some of it's on Tesla's website, like investor relations things. Um, but I think the majority of it's actually just Twitter, or the news feed. Like if you have Thinkorswim, there's always the news tab down here. Some of it's related. Same thing on Robinhood. Let's see where else. Where else do I grab it? I think this is the majority. But as soon as any of that information is available, people will post it on Twitter super fast. It's actually a pretty good news source. It was better when Trump was on there, because literally he can say all kinds of crazy stuff, and the market would just move on some of his tweets. That was super fun. I guess I have to wait a few more years before we get that back. I miss that. Yeah, I think you already partially covered this, but how do you know at what point to roll? Like, I don't know what point I need to roll so that I can still roll for a credit. Well, um, I guess there's no like exact way to know when you can get a credit, because the farther you roll out, um, the more likely you are to get a credit, because time is money. So at some point you should be able to roll out, like, you know, maybe it's a couple weeks, maybe it's a couple months. I've rolled out, I think, 9 months at the most, when I was just kind of getting frustrated with everything coming down. Um, but the time that I would say to roll is just when you're uncomfortable with the position at all in the near term. Um, 3 to 4 weeks. So Thetis really starts to decay about 4 weeks out, and then it increases velocity until that last day. So the earlier you can roll it, if you're uncomfortable with it, just it's going to be the better. And if the stock price is above the strikes, you're almost always going to be able to get a credit. If it's in the money, so if you have 1050, 1045s, and like Tesla's at whatever it's at right now, 1012, it's going to be more difficult to get a credit. Not impossible, but you'll likely just have to roll it out to a further date. There's no exact science. roll if it hits one of your strikes. It's just, yeah, for me it's not it's not necessarily that strike price. It's just comfort too. Or it depends on like what happens, right? Like yesterday with that dip, if we took, see, it's a thing we don't like now we can look at this chart in hindsight, right? We know what happened. It dipped down. But let's say we took just just this part, right? And we're just partially through the day. So we see it spike up. Great, CPI came down. And then it comes down. Market opens, and we're down, 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 down. Looks like dead cat bounce. Down, 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 down. So from this perspective, it looks like it's just going to go down all day, just based on general pattern recognition. Just looks like in a total downtrend. And that doesn't let us take advantage of the fact, like, I don't think it's going to spend much time down in the 900s based on decent CPI data, which is why I waited until kind of midday. I was going to do it first thing in the morning, but I had some other stuff to do, which would have been perfect. And if I would have rolled when we were down at, we were like hanging out around the 985s or something like that. Elon had just sold the day before, so I knew that pressure wasn't there. Generally, the market looked okay-ish. And then when we had that huge bounce up, I guess a huge bounce from 990 all the way to 1010. I guess psychologically that's pretty huge when it's above 1,000, and then able to roll at that point. But really, it kind of depends on what's going on or why we have the dip. Let's see. Have I rolled out my 12, 17 put credit spreads? I missed Friday video. No, you didn't. I missed Friday's video. I totally did. My 1017s. Let's see. My 1217s. Yes, I did. Sorry. So I have my ones that are super far out of the money, my 860s still sitting there. But yeah, I did. I just didn't end up recording anything. Part of the problem was, part of the problem with yesterday, or like last couple days, if any of you guys have like a job that's not just, you just go into work, do your thing, and then leave. I have the job where I get back and then I have even more work because I left, just to catch up on things. So that was part of the problem why I just didn't get to it yesterday. But I did. I rolled out all my 1217s except for my 900s. I won 900 and won 860, and that's it. And they're not worth much. And I just left them there because I was kind of contemplating what to do with that money. So I'm just not sure. There's only $5 left in it. I could close it. Actually, I should. I closed one for $5. I bought another share of Tesla yesterday. Yeah, so those two I still have left, but all my thousands I did roll out a couple weeks. I'm just listening today while I cook. What you cooking? The purple line, it's not an indicator. The purple line is the NASDAQ. So it'll match up, unless my face is in the way. Let me see on OBS. Yeah, you can't see it over here, but this is basically just NASDAQ overlaid over this. So not an indicator at all. But let's see. So it's basically this NASDAQ chart on top of Tesla. I just wanted to see how it was doing relative to that. And I don't know if you have Thinkorswim, but you can overlay any stock on top of another one. I wonder, there we go. So you can overlay anything to it, so we can do the SPY or hey, how is NEO? How's NEO doing compared to Tesla? So you can see how those kind of move relative to each other. But I'll typically have either the uh, the Nasdaq or the S&P. I was more curious just because I saw the craziness like after we had that bounce kind of midday on the SPY and Nasdaq. Everything was super like everything was just headed so far up. Even that after hours, it was super up, and then just Tesla just flat, which is sad. Ford, I think, had a pretty crazy day. Ford probably kicked its butt. Oops. So that's all it is. I didn't subscribe to Brad Finn. I never, after watching another live stream a couple weeks ago, I need to watch one of them. Does he catalog them? I want to hear the cookie thing. Um, let's see. Oh, Costco, I closed out of that just because, and I think Costco did really well, right, with earnings. So I didn't want to be in it for earnings. That was it. But they had an awesome beat. Dang, Costco killed it yesterday. So yeah, I still want to play Costco. Um, that's such a crazy little thing. It's so funny that it's just like how do I draw? Nope. So funny how that it's like this day didn't even happen. Yeah, so like I said when I opened it though, or not exactly when I opened it, somebody brought up, "Hey, Costco earnings are coming up." I just wanted to close before that on the Costco one, but overall, that chart is just, I mean, it still looks so dang beautiful. So now that earnings are done, I can certainly open up some more. I brought up Tesla. He went off again, comparing them to a losing company. I need to jump on there and ask him about it. I just want to hear it. Or is it recorded? I can see, like, go over there and check it out. A losing company? And I guess I'd like to hear somebody else's opinion on it. I don't understand what the negativity is about. Did you open up the put spread when stock price was lower? Which one? I've opened up a lot of them at various points and try to, yeah, like as soon as I have a drop, I'll definitely open some. I had a trade maybe you ran into. I had a put credit spread, originally got $272. I rolled it, but it cost me $10. But now the average credit for the put credit spread is 349. Yeah. So what probably happened is it went down in value. So your original one that was 272, by the time you rolled it was probably 359. You paid your $10 and then it went down to 349 credit. So just because you have to look at what you basically got paid to open it for. And I almost never look at that stuff. I guess it's kind of nice like that do have a placeholder though, but you probably rolled it out because it wasn't doing so well, I would imagine. So if you were positive on it and it only cost you like $5 to close, then it would look closer to what the credit received was. But since you were probably down on it, you rolled it, had to pay more, and um, and then it showed up as a new credit. And the other thing that kind of bites me sometimes well, it doesn't bite me, but it sucks. If you ever do get assigned with some on some spreads, and you basically have to buy and sell the stock, which I had on a couple Teslas, it shows your new price, your cost basis under the stock at those prices. So like on my Tesla shares, kind of proud that I bought them at a lower price. But now it shows my cost basis at like 656.50, which is totally inaccurate because I bought the majority of them all pre-split. I know I bought at least, how many did I have? I'd have to go back, but I bought the majority of those shares for, I guess, if I adjust for the split, about $200. And then I got assigned a couple times, so basically had to buy and sell. Oh, and I had a couple butterflies too. So that happened. So it bought and sold the shares. So I don't know. Some of their math, I don't like on there at all. And it probably, I'll bet it shows it on mine too. And the other thing that stinks, like once you've done that, the fact that it shows that you have an average credit of 349, at least it's giving you an accurate representation of where you're at from start to finish, right? You opened it for this amount, you're down this amount, and then if that happens to expire worthless, then you got that full amount, including any additional you had to collect. Or no, wait, no, it doesn't, because you only collected 272. Yeah. That is the one big positive on Tastyworks. When you roll, it just shows it all cumulatively. So you can have like a $5 wide spread that you've been rolling for 2 years, and then it'll show you the cumulative credit received. So you can have, I don't know, $4,000 on your one credit spread because it'll show the complete chain of it, which is pretty neat. But boy, we'll see if we head down anymore. And let me just take a look. Actually, I want to take a look. I need to take a look for myself what I'm going to do this next coming week. So, see what we have here. We have our calls and stuff we sold against things, and my $1,300 calls sold against my shares. We're up a bit on those. I think we sold those like for $100 a piece. We don't have much to collect until the end of next week, and basically I'm just keeping these here. That's what, $1,500 worth of collateral. I can do anything else with. I can do something else with. And then the 23rds. So the 23rds are going to be the ones that I'd be looking to roll out this coming Friday, so 5 days from now. And the thousands I would look to roll out sooner if we have any major downness. 920s, 900s, they can probably just sit there. I don't even know how I have an 850, 840. Oh, I think I just opened that one because I thought it was so ridiculous that I could get that much credit. Oh no, I only got $55 credit. Yeah, it's still pretty good. I wanted something super safe. That's what it was. I think I collected some premium, and I just wanted something super safe, something I didn't have to worry about. 980s, kind of same thing. We'll look to roll those out next Friday. And then these are ones I had rolled from the 17th, expiring at the end of the year. So we have quite a few right at that $1,000 mark, and actually in those last couple, not very far behind it. 27 put credit spreads at 985. Not very far, just a few more weeks before the end of the year. And then the rest of them are all at that 121, January 21st, which is going to be January should be an interesting month. Elon should be done selling. 2 new factories opening up. Delivery, production numbers. Good Lord. January is going to be pretty crazy. In my opinion. That's what I think. Unless macro environment is all terrible. I have a question. If you have a call spread and is negative, the amount is negative, do you lose all that money? Okay, so if you have if you have a call credit, okay, if you have a credit spread and is negative the amount, OS, do you lose all that money? I'm not actually sure what you're asking, but so with a credit spread, we can kind of let's look at a brand new one. They're pretty simple. They're very, very, very simple. So we'll look at a put credit spread. Unless you can clarify exactly what you're asking for. So say we sell our put credit spread. So it's a 960, 955. Oh, when you roll it up, let's see. Oh, it's negative amount. Do you lose all that money when you roll it? No, you don't lose any of it. Okay. So I see what you're asking. And I think you commented, sorry I didn't get back to you. I just haven't had time with it. No, when you roll, you don't lose any of the money. So the initial collateral, whatever that is, right? So for example, this 920, 910, $1,000 collateral. And are we down? Let me find one we're down on. Shouldn't be too hard to find one we're down on. Oh, there we go. We're down $7 on this one. So here's an 850, 840. We're down $7 on it. And we put up $1,000 to collect $55, right? And now it would cost us, in theory, that's probably a bad print, but in theory, $62 for us to close. Now, if I go to roll it, this was expiring. Where's my dang dates? Okay, 12/23. When I go to roll it, collateral doesn't go anywhere. It just stays in the bank, right? It stays at Robinhood. And then whatever I collect or I pay, that changes the amount of premium I've totally collected. So I think in that case, we collected $55, right? And I remember what this was. This was probably the 850s. So if I go to buy that one back, sell the 840s. So we go to roll this. And we'll go 20. We'll just roll it out a couple weeks. And sell and buy the 840. Okay, so we've collected $55. And if I go to roll this out, Robinhood's still holding my $1,000 collateral. And I collect an extra $78. So in which case, that initial $55 went to my account, right? That's my cash. I can do whatever I want as long as Robinhood's holding my $55. So in this case, we had our initial $55 we collected, and then if we roll it to this point, we collect an extra $78. So now, in this case, we would have collected $133. We get to keep that money no matter what, as long as Robinhood's holding on to our $1,000 collateral. The only way that we give any of this up is basically paying to close it. So, like going back to looking at the original one, so whatever position you have, like I collected $55, and if I decided I wanted to close this early and pay $62 to close it, which was a bad print, in that case, my overall trade round trip in and out I would have lost $7. But I think that was a bad print. So I think really, in this case, it would cost me $45 to close. So I collected 55, give back 45 to close it. I would have made $10. Or I let it run all the way till expiration, and as long as Tesla's above 850, I keep my whole $55, and then I get my $1,000 collateral back. Where the hell is Stone and Velocity? I don't know. Did I do it too late? Maybe I was gone for too long. They forgot. I don't know. So it doesn't really, and it really doesn't matter if you're negative or positive. What really matters when you're rolling out is if you had to pay or receive money, and that just augments your initial premium received. If you received 100 and you paid $20 to roll it out, then you're left with $80 potential profit. If you receive $20 on top of the $100, then you're looking at $120 total when that thing is expired. How long have I held in the money put credit spreads before they were profitable again? Maybe 6 months. The biggest ones that I held, and actually I've rolled up. I guess we should look at the year. So they were probably March that I rolled out till the end of the year. So March, I rolled all the way out till December or January. So that's 9 months. And then it took until this point to where we were really profitable on them again. So October. So what is that? That's about 7 months, 7 or 8 months. And then they were all super good, all really good. October, yeah. So when we had that next big movement, yeah, I think, yeah, because in the middle of the year it was tough, right? We just had all this choppiness. I'm sure May was sad. May probably was not awesome. Like, come on. But my overall thing, it doesn't matter what the short term is. Just, long term, somewhere out here, it'll be just way up there. So, Sam, does that make sense though? When you're first doing them, it's kind of a little bit confusing, and it gets so much more simpler. It's a lot more simple over time. I don't even think like after doing this for a while, I don't think the Greeks matter. I don't think that stuff matters. I don't think what actually happens inside of a put credit spread really matters, or a call credit spread, or basically you just need to know you're collecting some premium on collateral, and you don't want it to go below a certain strike price. I think that's the only mechanics of it that become important in the long run. And I guess, and to have some idea of what to expect with the value relative to price movement. But that's just going to come with experience, and to be comfortable with it too, right? So to be comfortable with losing unrealized gains, I think that's one big thing. Because, even though our account value dropped, yeah, some of it is actually due to equity, but a lot of it was just unrealized gains that I hadn't seen yet. And now they're just going to be unrealized for a little while longer. I have a credit spread, 20 contracts on Tesla out of 1,000, and I'm in the negative $2,100. If I roll, I don't lose. Correct. You do not lose until time catches up with that expiration date, right? So if you took those and you rolled them out 6 months from now, you absolutely 100% cannot lose. Well, not 100%, 99.99999%, unless somebody got weird and exercised something, but that almost never happens, especially on a non-dividend paying stock. your next opportunity to lose or win would be that 6 months out. And if you roll them 6 months out, most likely you would be grabbing a big fat credit too. You just get paid for that extra time. So like it's such a huge win-win-win, right? Like if you have those thousands expiring anytime soon, one, because we're just barely above it right now, is going to be uncomfortable. So you have the option of closing them out, paying whatever, because you're down $2,100 on them, which sucks. So you probably don't want to lose. So the win-win-win situation is roll them out a few more months, give it time to do what it's going to do. Elon being done selling whatever, all the catalysts coming out, and to be above it, so you get more time, less stress, and because you're rolling them out, roll them out for another month, another 3 weeks or something like that. I mean, you can wait a little bit more time, but you'll get paid to do that. So when you roll them out, 20 of them, you should easily collect $40 a piece for them. So you should be able to collect $800 like cash, put it in your account. Who knows, $40, $50, collect $800, collect $1,000, something like that. And that'll just be extra cash in the account. You could open up a couple more with that if you wanted to. I don't know how wide they are. Kind of assume they're $5 wide. But you'll get paid, a little less stress because they're not expiring so soon. I mean, 2-3 weeks. This is where I would look to manage them if you're uncomfortable with them. Give yourself another month, couple months if you want, and collect some more money. Because what are those guys? I probably have the same ones, right? Do I have any of those? There we go. So I do. One of these two that I have. How much is left in these? No, not my equity, last price. 1031s. So they're either worth $2 or $4, right? So I own at least one of the same thing that you do. I would assume it's these. I will wait until this Friday? Yeah, I'll wait till next Friday. This Friday. Yeah, 2 weeks from now before I look at rolling this out, unless the price drops. If the price drops and we see some more downward pressure or just macro stuff, I'll roll them out sooner. But for $2, you can roll them out till 21st, giving you a whole nother month. And what are these gonna give you? It looks like we have a few thousand. We have 71 1000s expiring in January. Jesus. So 235. So you can grab $30 a piece just by rolling them out to January. And that. Jeez, there's a lot of calculators open. I didn't need that. Whoops. Hey. 35 times 20, it's 700. Why do I need a calculator for that? I swear. And then you could even go up further if that's not something that's comfortable for you. But just keep it comfortable. That's what I'm gonna say. I don't know. That's not financial advice. That's mental advice, I suppose. Yeah, we have a lot actually. January we have 40. We have like over 100 and some expiring January. So hopefully December and January, the bottom doesn't fall out of the market or something. No World War III. That's all I just need. But yeah, at the end of the day, unless anything crazy happens, I will be 2 more weeks, and I'm gonna roll mine out. We are an hour 20. So I'm gonna get moving on to the rest of the stuff I need to catch up for being away for a while. Monday, get back to regular video making, and or at least those like at least updates and stuff. Hopefully we have a decent week. This I feel like for a month, or there was like a few weeks where everything was like on cloud nine because we were just like rocketing up crazy, like unbelievable amounts, and then came right back down to earth. Where did we end up? So 4,000 for the week, which isn't great. I mean, I think that pays for the vacation kind of, but like this last month, down 40,000 on the month, and only up $22,000 on the quarter at this point. And year, let's see, 100,000 on the year, and from, let's see, January 1st, 173. So we're up a bit. Wait, where's January 1st? 173. So 36. 30, 70 on the year so far. But January, I'm feeling January is going to be a big month. All part of the pain. You're very welcome. Yeah, you guys enjoy the rest of your weekend too. Yesterday it was like raining and pouring, and holy smokes, whatever happened to like tornadoes and stuff going on? Hopefully no one is there. Hopefully that's not part of it. I'm sure like plenty of bad stuff going on. So yes, you guys too. Yeah. And once I found my buttons to end the stream, I'm gonna end the stream. So love you guys. Yeah, have a great rest of your weekend, and we'll see you this week and next weekend.